Hi guys, my name is Nosi and this is Finance with Nosisa. In this video, I want to discuss how to improve your credit score. There are many things that I've done in my life and in my career that have negatively affected my credit score. So I just wanted to share some of those things that I've learned, and hopefully this can add value to you as well. In this video, I want to talk about how to improve your credit score. So I've made a couple of mistakes in my life and basically damaged my credit score, but there are things that you can do to improve your credit score. So credit score is important because it's basically a matrix, like a number range from like 0 to 999, and it shows how healthy you are with your money. So that score then is what the banks use to see whether they're going to give you credit when you apply for something. If you don't have credit, a healthy credit score can help you better position yourself to be able to be approved by banks. So the higher the number is to 999, the better your credit score is, and the lower your number is, the less risky you are to credit providers. So the first thing that you can do is to pay your credit on time. I know this one seems like obvious, but paying your creditors on time improves your credit score. So remember that your credit providers tell the bureaus how well you are in paying every month, and based on this, whether you pay on time affects how well they rate you for your credit and how good your credit score is going to be for future items that you want to buy on credit. If you are struggling to pay creditors, I know like the times that we live in, the economy that we live in right now, things are a little bit tough for people, but if you are struggling to make payments, I suggest that you reach out to your credit providers and make some kind of a plan, an arrangement, so that you can not default and just ignore them, but rather make some kind of a plan on how you can catch up, maybe pay a certain amount, maybe defer it, or that type of thing, so that it doesn't affect your credit. Like, you don't want to ignore them, because if you ignore them, then when they report you to the bureaus, it negatively affects your credit score, and it's not a good idea for future people who are considering giving you credit. Another thing that you can do if you're struggling is to consolidate all your loans. So with this, I think that it's a good idea just to do your research. Even with what I'm saying, it's just a good idea to do your research, find out for yourself what credit score is, how to improve it, speak to your bank, speak to your credit provider so that they can give you options on how you can improve your credit score. But one thing that you can do is to consolidate your debt. But with this, also remember to do your research and make sure you don't find yourself in contracts that negatively affect you in another way. So with any contract, just ask all of the right questions. Make sure you understand what it means. If I consolidate my debt, what does that mean? Does it mean I can't get future debts? Does it affect any other application? How does it affect you legally, financially, and all those things? So before you consolidate debt, I think it's a good idea just to ask the appropriate questions and do as much research as you can. So the one thing though that debt consolidation can do is to make sure that you consolidate it so you have like one debt. So it's easier then to manage that one debt and to pay the debt, and then you're not like paying this one and not paying that one and paying this one and not paying that one, which can then negatively affect your credit score. So something else that you can do is that if you have a court judgment against you, is to pay that first, because not paying the court judgment affects your credit score and reduces it and makes it not a good credit score. So paying any judgments against you first, making that a priority before all your other credit, is also a good idea. Something that can improve your credit is to manage your accounts and your credits. So the longer you have credit, the longer you have credit and the longer you pay on time and you have a clean, nice record, then this improves your credit score, because anyone who's looking to give you credit in the future will see how frequently you're paying, how often you pay, and that you pay on time, and that you are a good like you're less risky of defaulting on payment, and they're able then to give you credit going forward. So managing your credit, making sure that it's nice and clean and you pay on time when you're supposed to pay it, and if you can't pay, then to just speak to them to make some kind of an arrangement. I feel that sometimes credit providers are willing to work with you, especially if you're having a hard time, to then see what can we do to maybe defer it for like 3 months, maybe to do something else. Because this happened for me as well. When my company closed down, I went to my credit provider, and then they were able to defer it for 3 months, and then I was able to then take control of my credit and not miss any payments. But having kept quiet and maybe got myself under stress and under pressure is not good for your health, and it's also not good financially as well. With that, with like deferring payments and those type of things, make sure you do your research, make sure you speak to your credit providers and get as much information as possible, because you don't want to find yourself in other implications and other consequences that you hadn't thought about when you got into that agreement. Something else to also consider is that if you have outstanding payments, is to pay the outstanding payments. I don't know if there's a quick way to fix your credit, but I do know that if you pay your outstanding amounts, it's the quickest way to improve your credit. So if you've got anything outstanding with any credit provider, then to just pay that off before you do anything else, before you make any purchases, before you use money on other luxuries or other items, and to make sure you pay that credit score. Obviously, you don't want to find yourself in a situation where you're paying a creditor but you don't have groceries. It's not good. So what you can do in that situation is to maybe pay your creditor a little bit of the amount that you have extra, and then make sure you have groceries for the end of the month. But making sure that you chip at that mountain every single month and reduce your outstanding balance is the best way to then get into good books with your creditors and therefore improve your credit score as well. So court judgments stay on your record for 5 years. So it doesn't mean that you're not going to get approved for credit. However, it means that you're perceived as a higher risk. And if you're perceived as a higher risk, it means that the interest rate that the credit provider will grant you will be higher. So it doesn't mean that you're not going to get credit, but you might have someone who's willing to give you credit, but because of your perceived risk, having like a bad credit score or a lower credit score, they're then going to give you a high interest rate. Remember that nothing destroys your credit score than missing payments. So it's a red flag to any credit providers when you're missing payments, when you are defaulting, when you are not showing consistency of the credit that you already have. So what you don't want to do is to find yourself with such a terrible credit score that you basically have to start up. But having said that, even if you do have a bad credit score, there are so many resources online and also your credit provider who I'm sure will be willing to help you to improve it and make a plan on how you can improve your credit score and how you can get your life back in order. So it's not over where you have a bad credit score, because life happens to everybody. It happened to me, but you can then say, okay, I want to at least start improving my score month by month, year by year, so I get myself in a better financial position. So another thing that you shouldn't do is to apply for too many things at once. This is a sign that someone is taking on too much debt at once or is wanting to take too much debt at once, and this lowers your credit score, because when you apply for credit, they will ask for permission to look at your credit score, and then that's also reflected on your record. And the more you apply at the same time, you look like you want to take on too much credit or you have too much credit, and this lowers your credit score. So don't apply for credit all at once, because this is not a good idea. Your credit score will suffer if you have too much debt compared to how much income you have. So if your income is a certain amount and your debt is a certain amount and it keeps rising, this affects your credit score and lowers it. So you want to make sure that your debt in relation to your income is always a healthy ratio, a healthy percentage, so that you're able to then meet your debt every month and pay the minimum payments when they're due, because your income is not under pressure to meet these debts when they're due. So as far as possible, different sources say different things on the internet, but some of them say that you don't want to use 50% of your available credit. So even if your credit card gives you 10,000 Rand to use, don't max it out and use that, because that's not a good look and it doesn't do anything good for your credit. It actually puts you under pressure to then pay your minimum payments every single month. But try to have a ratio of like 50% usage, which means that if you've got 10,000 Rand on your credit card, maybe use 5,000 Rand as a max, and make sure that you pay that off when it becomes due, and you make sure that you don't go over that, because you don't, what affects your credit score badly is maxing out your credit cards. It doesn't look good on you. It also just puts you under financial pressure when you have to pay every single month for your credit card. If you find yourself under difficulty in managing your debt, make sure that you check your credit score regularly. You want to make sure that you check it frequently. There are different resources online that you can use and different apps that you can use to check your credit score, to make sure you're online, to check for any errors, to check for anything that shouldn't be on your credit score, so that you can fix that as soon as possible. And also you can check if there's any court judgments or anything against you as well. So something else that can affect your credit score is opening accounts. So when you open an account, you are adding to the debt that you already have. So this affects your credit score for a little bit, because you're basically increasing your debt repayments that are taking up a lot of your monthly income. Your credit score in a way reflects how much debt you can afford. So the more debt you take on, the amount of debt you can afford drops, and so does your credit score. So just to remember as well that different credit checks also lowers your credit score. So the more there are credit checks on your profile, it lowers down your credit score. So it's not a good idea to apply for certain things all at once. Thank you guys for watching this video. I hope to see you soon on my next videos. Please like, share, and subscribe, and I'll see you next time. Goodbye.